What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is October 11th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about why Bitcoin is at an ultimatum in its price. We need to spend some time to talk about the significant weakness that is continuing to be presented in the trend for Bitcoin, but outside of that as well, how altcoins could be on the verge of a major correction in valuation, as there's still a lot of froth and unnecessary and non-deserved valuation in the altcoin space when it comes to the fundamental narratives that are supposedly driving it. We've got a lot to unpack here in today's video, guys, so if you happen to enjoy it, consider dropping a like. It's one of the greatest ways you can support the channel, and let's go ahead and kick off the rambling. Alright guys, I want to spend some time here to do something that I think a lot of people haven't been focusing on, because to be honest, it can feel like the market is pretty dull right now. It's pretty boring, there's not much trend going on, but I have to tell you guys, if you look beyond the kind of broader trend here, the fact that we've been pretty much neutral since back in March, we need to understand what this means for price and also analyze the price action we have to work with to try to gauge and understand what's really going on here with Bitcoin. Then we'll spend some time to talk about altcoins and the macro perspective. First off here, let's go ahead and talk about the one optimistic thing here. Since this expansion back here in December of 2022, coming up here into 2023, and really since this period of neutrality within March, we've been able to see that buyers are interested at around $25,000. That's a great first step here. In fact, considering that this was prior resistance back in August of 2022 and resistance in February 2023, that's a really good sign to see here. That's the biggest, most optimistic thing I can point towards here when I'm analyzing price. I'm trying to take this from a non-biased perspective. I'm not ultra short Bitcoin or anything right now. We are bearish, to be honest. I'll let you guys know what my opinion is. But at the end of the day, I try to view things in as non-biased way as possible. That is a really good sign to see here, that there were buyers at this range. But there are a couple things we need to consider here in the near term. The first thing here is the response from buyers at that price range. And what I don't like seeing here is that versus back in June, where essentially we should be getting closer and closer towards a ETF if the bulls are correct on this. And if we are in a bull market, we need to have that optimism, that charge to really clear through and get past this sizable previous support, which is now acting as resistance between 28K and 32K. Unfortunately, we're not seeing that here. We're seeing it move at a sluggish pace here from 25K up towards the current price of 27K or around 28,500 back here in October, versus the response here in June, where we went from 25K all the way up to 31K in a matter of less than a week and a half of trading price, right? So if you get my point here, what I'm talking about is the acceleration in price is what we want to see here. We want to see optimism. We want to see FOMO. We want to see the market orders flowing in and taking any best available price on Bitcoin, because we feel that the sky is the limit. That's what drives bull markets, not bid side support. And that's my point here, which is while it is a great thing to see buyers are currently providing bid side support here at around 25K, that can stop anytime if we continue to retest that price range. That's what we're going to spend a lot of time talking about in altcoins here. So we are seeing some maybe institutional or large buy side interest here at 25K, but we are not seeing market order buy side pressure right now, and that is not a good sign for a bull market narrative here. Outside of that as well, whereas back here, we were spending a lot of time in this resistance range, it looks like very well now that the lower band of that long-term historic previous support that's now acting as resistance from $28,000 to $32,000 for Bitcoin's price, now it's looking like we can't even get back in there. We faced resistance back here in early October, and for the past week, what looked like it might be attempts to break out in there, we are getting market sell-side pressure outweighing buy-side pressure. So what gives here? Is this really a bull market? I gotta tell you guys, I don't think it's a bull market here. And I'll tell you why. Because while the past 6 months here are already showing us here more signs, I think, or as just as equal amount of signs that things are bearish than bullish. Just trying to be fair from price. The fact that we broke through the ascending channel of support, right, with higher lows and higher highs, that was your first warning sign. The second warning sign was facing resistance here at previous historic support multiple times and not being able to get back up there. But outside of that as well, at the end of the day, I think most people who are even optimistic are saying, Nick, okay, maybe you're right here. The Bitcoin's price is going to correct, maybe 20K or whatever. Essentially, a lot of people believe it's one of two scenarios, right? I think the optimistic crowd thinks that this is similar to what we saw back in 2019. We overshot, we went up 342%, and then we saw following that around a 70+% correction here towards the COVID lows. And I understand some people may say it's going to be something more moderate, like 50% or something, as we should have been, because COVID was an anomaly or a black swan event, whatever the argument can be. Sure. A 50% correction, though, from current prices, if we go over here and take a look at this from the absolute highs, a 50% pullback takes us down here right back to where we were in November 2022. Maybe it's 33%, maybe it's 40%, maybe it's 50 or even worse. Either way, that means there's no need to FOMO into Bitcoin right now. So why are we going out there saying it's bull market, you got a dollar cost average, you got to get in? Outside of that as well, there's also the other scenario that what we saw in November is not the lows. And I know people think that we're being too bearish here for saying that, but it's something we should be prepared for as liquidity is contracting at its most rapid pace in history. Global liquidity has never pulled back like this in the past century. So we need to be prepared here for what that's going to do to financial assets like Bitcoin that are hyper dependent on global liquidity. They are money debasement hedges. Cryptocurrencies, at the end of the day, hedge against that increase in the money supply. That's the fundamental here. Well, unfortunately, Bitcoin is not showing up to the plate here alone in its price. Whether you agree that the Federal Reserve is going to continue contracting or they're going to start to ease or whatever, price action is not showing it here, guys. It's showing that there's no reason to FOMO here and that there's no market buy-side pressure when Bitcoin has accelerated a mere 100%. That doesn't look like a bull market to me. But even beyond that, right? Some of you may believe that the ETF is coming around the corner, whatever it may be, whatever narrative might have you juiced up. That's understandable and respectable. Bitcoin has been one of the safe and more kind of leading assets here in the market. But I want to spend some time to talk about the picture for total market cap and lead into our conversation of altcoins, because essentially, if we take a look here at the last year, more than the last year here, about a year and 4 months since back in June of 2022, boy, market price has not been in a bull market if you're talking about total cryptocurrency market capitalization. This really gives you a good picture here. If we take a look throughout history, right, you can see clear trend follow through and direction back in the past here. Even after the capitulation range here afterwards, we could really start to see here that there were some accelerations clearing out a year's worth of resistance and continuing to hold up, build strong technical structures and move higher. Take a look at this. I mean, guys, if we're lucky, like for the bullish argument, again, as we talked about these two scenarios, if the bulls are lucky, we're coming back down here just to $750, $800 billion. So a 20-25% correction. That's what I feel is the more optimistic scenario here at this point, because what price is doing here, if we're lucky, is accumulation. Right? This line here, right, that we've got roughly around 1.1 trillion, and down here at $800 billion. This $300 billion range could potentially be an accumulation range. And we've been saying that for months here, that the more optimistic scenario is that we're going to come down and retest those lows for a third time in accordance with the one back in January 2021. Or if we don't hold at that range, which we've got to be prepared for here, have some capital on the sidelines and be ready to dollar cost average and accumulate big, we could potentially be coming down to make the descending line of resistance with the prior 2021 and 2022 highs as a new line of support where price could accelerate from there and get some buyers. And if that doesn't hold, then maybe we get a traditional crypto bear market correction of around 86-87% like we did back in 2017 and 2018. And we get price back here in this range where there was multiple attempts facing resistance that now could potentially serve as a foundation for support. That could very well be the case. I'm not saying it needs to go down that low, guys. Please don't get lost in the noise here. There's so many people out there giving you an exact price target for Bitcoin. There are so many people who are so eager to convince you of their direction and price and say how bad it's going to get. At the end of the day, we're just talking about levels here. We're trying to take things from a moderate approach. There are some people who believe we're not being bearish enough. There are some people who believe that we are clearly missing the ball here and that we're in a full swing bull market. Take a look at this price, guys. This is a no trend scenario here. And this tells me that those who are remaining in the market, buyers and sellers, are really puzzled and waiting to see, hey, are there going to be new narratives coming? Is there going to be reason to speculate on altcoins? Is there going to be new, kind of reasons for people to be exposed to this asset class? And more importantly, is there going to be liquidity there to back it up? Because we know liquidity is the lifeblood of crypto. And, well, again, let's just take a look here at individual prices. Maybe throughout all of this, there's a silver lining. Perhaps there are some plays that are doing well. Well, ETH BTC, for example, for the last year, practically each and every month has moved lower. It's continued to correct here, currently down 33% against its relative highs here in November. We turn off the chart here. As you all know, for months now, for over a year, we've been bearish on Ethereum here. And essentially, it continues to bleed out against Bitcoin. Now, sure, yes, if you pick the November lows here in dollar terms, yeah, Ethereum's of course up, right? All cryptocurrencies are going to be probably up from those lows in dollar terms. But again, the key point here I want to ask is whether or not we've got the optimistic signs of a long-term bull market. I'm not here for trading per se these short-term relief rallies. I want to know whether or not we got a bull market conviction. Because here's the thing. Well, a lot of people are saying, oh, this is not a big deal, yada, whatever. Nick, you're being too bearish. I want you guys to focus here on the ETH to BTC ratio because there is something very significant here. If we go ahead and just get rid of some of these things here to kind of clear up our chart, we are very likely coming up here to retest this green line, which we've talked about for months. And the reason we've signified it here is that it's not only the first point where we might consider maybe DCAing here. We set our standards high here that we want to wait for those corrections. And I think at this point, I mean, if you guys just look at the trend here, I think you guys know this is likely going to be retested here. I think even bulls would agree with that. But outside of that as well, I want you guys to ask a big question. What if that green line doesn't hold? That line that has been holding since December of 2016. Wow. In crypto terms, that's a lifetime. That's a long period of history. And not to mention incredibly significant for the second largest cryptocurrency. This chart holds a lot of significance here. What happens if there's more market sell side pressure than buy side pressure? I don't want to hear anyone saying, ETH staking is less inflationary and there's EIP 1559 and ETH's going to be deflationary. I don't care about it. I care about what price is telling me, right? And this is where, again, at the end of the day, if you're looking at the long term here, you can see whether or not the fundamentals are strong or not. I don't have to tell you that at the end of the day, these monetary policy changes to Ethereum are not enough. I don't have to tell you that right now there is not a single decentralized application on Ethereum that I'm juiced up about, I'm excited about, that's new, innovative, driving liquidity and users to the crypto space. I don't have to tell you that. I can tell you that the chart, the market is telling you that right now. And if we don't have enough buyers here at this range, where is the support going to be? Where are we going to get buyers in this market? And if Bitcoin isn't leading, and if Ethereum's not leading, what's that going to mean for the broader altcoin space? I want to run through these charts real quick, guys. Take a look at BNB, right? Long-term chart here, a lot of support since December 2017, right? We are steadfast towards there. Another 22% correction, and we're there. From there, from the absolute relative highs, that'd be a 70% correction. But I want you guys to consider here, right? Some people might say, oh, 70% sounds like a great buy the dip opportunity. What if that line is broken? What if there's still more market sell side pressure than buy side pressure? How low could it go? Well, essentially speaking, if we come down here towards the relative highs here, that's about a 75% correction. And if we don't find support at this kind of range here between 75 and 77%, the next range is down here, an 85% correction at the relative highs in June of 2018 and also around this range here in 2020, right? So again, that's a sizable difference. If you were to buy here today, that's 63% lower. And that's a big problem here is that people don't understand in many ways, and not here to insult anyone or sound like a monolith of opinion or be stuck up. I'm just here to try to explain a really big dynamic that I see so many people missing, which is that they analyze top to bottom corrections and they don't realize how much of a difference, say, a 62% correction is from an 85% correction. It's not about, oh, just DCA. No, there could be some sizable differences here. And the big part you got to be willing to be prepared for is that it may never go back to those all-time highs. You may be trading at a loss for the rest of that position's lifetime. BNB may never come back to those highs. Take a look at XRP. Now, I know a lot of people who bought into XRP way back in the last bull market in December 2017 and are still reeling from it. But I don't want to sit here and talk about that, right? Yeah, that's a great example of our previous point. But I want to analyze in the near term, right? A lot of people believe XRP is going to go up. And it is, again, on par with BNB to be the third largest altcoin, essentially the fourth largest cryptocurrency. Let's take a look at what its price is telling us, right? Suppose they had a big victory against the SEC in July. Well, ever since then, like we talked about exactly, you can go back and watch the videos, that price gain would be faded. And look at that, month by month by month by month by month by month. We are continuing to move lower here. And if we do not hold on this temporary line of support here, right, between these lows, right, which is getting very close, if we break through that, then we're likely coming down to this range at around 1,200 sats. And if that doesn't hold, we're going in the long-term multi-month accumulation range. That's where I'd be interested in getting XRP, between 500 to 1,000 sats. I don't know if it's exactly, sometimes here on TradingView, they don't get the Satoshis. There's a lot of decimal points there, but essentially speaking, you see what I'm talking about in the chart here. To put it in percentage terms, from where we are now, that could be anywhere from a 33% correction all the way down to a 75% correction. Whew, we got to be prepared for some pretty big moves here, guys. If buyers are not having any appetite at this range, right, whether it be for Bitcoin, whether it be for Ethereum, BNB, or XRP, or even Cardano, this ascending line of support that's been holding since November 2017 against Bitcoin, if that snaps, we're moving lower here. And that's another 40% plus, maybe even 50% correction here. Yeah, 50% off of those lows. Now, I thought I'd top it all off here with one last chart here, and then I'll get to my closing point. Take a look at Dogecoin. Right, Dogecoin so far, from top to bottom, has corrected 83%. Now, a lot of people look at that and go, oh, Nick, 80% correction. That's big even level. That's a huge correction. I got to buy into that, right? And looks like so far, buyers have been coming in here since back in June of 2022. And it makes sense that this was prior resistance way back when Dogecoin launched. It was resistance here in January 2022. Why not essentially buy the dip on Dogecoin? Well, I want to tell you guys, because I believe it's not gone far down enough. It has not seen enough capitulation just yet. And capitulation comes in waves usually. It doesn't just happen in one single pullback. You can see that here and here. There's usually going to be probably about 3 waves of correction in any long drawn out bear market. The environment is very different here. And it's important to not note here that I'm being overly bearish. Essentially, we're calling for Dogecoin to come down for a 90% correction. A lot of people say, Nick, it can't be that bearish on it. I mean, essentially, it's already gone down so much. Yeah. If we take top to bottom analysis here, we're down 83% right now. Essentially speaking, if we have a 90% correction, that takes us down towards around 130 sats, somewhere between this ballpark of 150 to 100 sats. Some might say that that's too bearish. Well, if we simply take a look at the long-term charts, Doge has done this multiple times. It's had 2 90% plus corrections of 91, 92% to the downside. Had an 87% correction here before its breakout. And the main point I want to talk about here is it's not that I'm being overly bearish. It's that we got well overextended. We went into la-la land levels of crazy. At a period of time where Bitcoin was already, going up from around, say, $10,000 to $65,000. In that window of time, Dogecoin outpaced Bitcoin from 15 sats all the way up towards a relative high of 1,287. Oh my gosh, I mean, well over 75x here in market capitalization, in valuation against Bitcoin, an asset that was already 6xing in a year, 5xing, roughly speaking. So am I really being too bearish here? That's the thing that kind of itches me sometimes, guys, because I don't really, I've used the internet since I was like a kid and stuff. I don't get so much bothered by comments, and I look, at the end of the day, I'm totally fine. People respectfully disagree, and they kind of prove why they believe the way that they do and stuff. But the name calling of me being a perma bear for thinking that, oh, Dogecoin can correct to 90% and come down towards a range of resistance, which it did back here in 2021. In here in 2017 and here in 2014, and make that new support for the long term. until liquidity is on our side again? Is that really too bearish here? Let's try to see somewhere in the middle here, guys. I do believe that things will go up and to the right in the future. I just don't think they're going to do it yet. And man, I gotta say, if this is new support and all we see is a 22% move on a monthly candle followed by 3 months of just fading those gains with no follow through, that's not a bull market. We can see what Dogecoin looks like in a bull market. 600% moves in a month, 542%. Even back here towards more moderate months, 80%, 30%, 209%. Multiple months, 73%, 79%, 114% in a single month. That is what I'm looking for here. And maybe Dogecoin isn't going to produce such optimistic results, but man, I gotta see some 10, 20, 30% months in a row before I start really getting excited. I don't care about no trend. Like I don't care about this. I mean, again, look at the responses we talked about earlier. From buyers in June, a 23% move, barely closing any of those gains out, right, holding them up there, and then having a 94% move. I understand there's some nuance with maybe Elon was saying Twitter is going to use Doge or whatever. Look, whatever. Like it doesn't matter what the narrative is. It matters about price action. Because no matter what those narratives are, if price is not showing that it's interested at that range anymore, and we're moving lower and lower, and there's no buyers coming in, we're likely going to continue moving lower and lower. It's a rolling effect here of weakening expectations. People slowly coming to the realization that they were overexposed, that what they thought was a dip is still too high. And only until you really get that market buy-side pressure will these assets start to move. It's the case here in 2021. It was the case in December 2017. It was the case in March of 2017. And it's been the case throughout all of history. Bull markets are driven by market buy-side pressure, not bid-side support. And take a look here as well at the NASDAQ, right? It might seem like I'm bashing on crypto here, but since the summer, we're seeing the same stagnation here in equities. Lower highs, lower lows, and sure, we're not seeing any major flash sale just yet. The markets are waiting right now for a clear sign of trend direction. But I gotta tell you guys, the macro scene is getting more and more aware that a soft landing is not happening and that a recession is likely in the cards. And these can hang up here for a while, but so long as they're sitting in lower highs and lower lows, that's not a good sign. That's a sign here that we're ready to move lower here. Take a look here at NVIDIA, right? NVIDIA has shot itself up substantially. The market has repriced NVIDIA as $1 trillion company. And the question here is whether or not those blowout quarters over the last quarter or so are going to be able to keep up. The growth expectations that the market currently has that's justifying this valuation for NVIDIA still going to play out. Because if they do, then yeah, NVIDIA can maybe continue to slowly grind up higher here, even from its already amazing gains. But if it doesn't, which I think is a very likely scenario here as we enter towards a recessionary environment, AI expectations are cooling down. Essentially speaking, NVIDIA will cool down and fill some of these big gaps that it has on its chart. And that's hundreds of billions of dollars that could get wiped out. Apple here as well, right? NVIDIA and Apple are two of the magnificent seven companies that have made up the overwhelming gains of the S&P 500 and the NASDAQ. And where essentially if they fail or we kind of remove them out of the picture, all of their stocks are break even for this year, right? So it's a very important dynamic here. We got to watch these stocks. I'm not saying that it doesn't mean that the S&P 500 and the NASDAQ aren't up, right? If you've passively invested in those indices, yeah, they've recovered a lot over the past year. But the question is, will they continue to do so? Because right now, even these market leaders are showing signs of weakness here. Lower highs and lower lows here for Apple, the largest stock, currently a $2.78 trillion, roughly $2.8 trillion company. If that gets cut in half again by 50%, that's $1.4 trillion in market capitalization. We have been calling for this to happen sometime in 2024. And if this deviation plays out, if we break below this line of previous resistance, this is a multi-month deviation on the biggest publicly traded stock in the world. And that, to any advanced trader, to any institutional trader who's worth their salt, is going to look absolutely terrible. I mean, I'll just go ahead and just pull up the chart here, right? Just look at the chart. Does that look good to you guys? Like, does this look like, oh yes, bull market activity here. Woohoo! Multi-month green acceleration with very minimal correction. It looks like to me like Apple's starting to hit its growth peak here. There's a clear trend deviation here where we've started to, kind of slow down our trend acceleration. And I'm quite worried that it's going to continue pulling back here, guys. Maybe it doesn't. Maybe equities hold out. But I lean in the camp here that Apple needs a sizable fair correction. I don't think it got that because it's been distorted by stock buybacks, only going down 31% after making incredibly sizable gains and trading at a ridiculous 30 PE ratio going into a recession. If Apple merely comes back towards a more moderate PE of 15 to 20 like it has done throughout a lot of its history, its financials could stay the exact same. I'm not even talking about recessionary impacts. It's coming down here. And it was just there back in 2020. Not too much to ask. Just here to let you guys know, there are plentiful amounts of people out there who will give you the most optimistic tale. I'm not even here to give you the most doomsday tale here. I'm trying to shoot somewhere, I think, in the middle. Maybe with a slight bearish lean. I'm not going to lie about it. But yeah, it's just what I see, guys. The charts aren't looking good. And if you're hoping that, hey, maybe the tech stocks will cool down, right? But what about those other stocks, Nick? They haven't gone up, at all. Maybe they've got some room to accelerate after these technology stocks went up. Well, if you're looking at the financial sector is incredibly weak right now. IAT, the regional banks, look like they're about to fall off a cliff. There's a reason these stocks haven't moved up, guys, because we're in an interest rate environment, the likes of which we haven't seen in decades. And we are still in the room to potentially accelerate higher here if inflation doesn't properly cool down. And until we get a real short, swift recession where we can really set the tone here for the years to come, that inflation is going to be dealt with, it's going to be done, and we're going to be able to get back towards the number going up and to the right, people doing what they do, and innovation continuing to thrive with hopefully better monetary policy to compensate, right? We can't get there until we go through some pain. And we have a lot of things that we're watching here within the Dash Report. This is our newsletter here on the channel. If you guys haven't checked it out yet, it's a 20-page plus report that we do here covering crypto, commodities, Forex, and stocks. But outside of that as well, we have webinars that we do every month. In the middle part of the month, we actually got one coming up here later this week. And outside of that as well, or actually it's probably going to be maybe later this week, but outside of this as well, we've got the alerts group. We've got, for example, our Dash Report discussion group. We essentially talk about some of the dominoes that we see breaking in financial markets that could provide ample short opportunities, that could potentially provide really big capitulation where we can find those really big buy the dip opportunities, and essentially the key factors we need to watch in order to know when a recession is hitting. It's time to buckle up, guys. We got to get prepared for this. And I love if you guys enjoy the free content here on this channel. Even if you just come here, if you like the videos, it means a lot. But one great way where you guys can support this channel for less than $1 a day, just a couple of cents each day, is signing up for the Dash Report. And if you sign up on an annualized basis, you can get essentially a 20% discount. I think if this can help you make one solid trade or two solid trades each year that really help you to make some yield and return in the market, or help you to avoid some of these painful recessions, then essentially speaking, the Dash Report can be a worthy investment for your investment journey. At the end of the day, guys, we're a great community of hundreds of different people here from the DataDash channel, and I think that interacting with them as well can also give a lot of great value for your trading journey as well. But I want to close things off here, guys. As the yield curve continues to uninvert here from -1% to pretty much minus 0.4%, I think that we're going to continue to see this acceleration higher here. This is again showcasing us that we are just months away here from that big calamity event that's going to spark a recession. Could be a mere 2-3 months out, maybe even less than that. Could be further out, right? About 4-6 months. Either way, it's time to batten down the hatches, because if there is going to be a recession, equities will start to reprice it, and the markets will start to prepare for this move lower. You can bet on that, even with your hopes of an AI narrative or whatever it may be, or how great you think Bitcoin is, or a BlackRock Bitcoin ETF. At the end of the day, we got to be prepared for a global recession, and that is going to cut corporate earnings, it is going to lower the PE ratios of companies, it is going to kill investor sentiment for a near period of time, and that's going to give us real capitulation, right? And to think that total market cap can't come down here for a new third low here, right, in alignment with the prior lows at around $750 million. If you're in that camp, guys, I'm only here to say this as a friend. I'm not here to tell you to go use my Bybit referral link and go short and overtrade the market. I'm here to tell you as a friend that keep open to it. Keep open to it. You don't have to take me at my word, but keep open that may be a reality when you're doing your own market analysis. Global liquidity, no significant trend other than to the downside. Cut back all of those optimistic returns that we had in the close of 2022. The Fed removed another $46 billion of liquidity from its balance sheet, albeit not dropping it at a rapid rate, still not adding money to the money supply and continuing contraction. And we have got a long way to go before we even cut out the secondary wave of COVID liquidity, which is, I think, at a minimum, where we need to get to, if we're being honest and realistic, guys. I'm not even saying that the Fed's going to cut out all this money. We can see that in the past QE efforts that the Fed didn't pull back its money supply before. All I'm saying here is that after, again, going from a $4 trillion balance sheet up towards a $9 trillion, that we're going to get somewhere in the ballpark of around $7 to $6 trillion for the U.S. Federal Reserve balance sheet. That's my guess at it. And if that's the case, where we are now at around $8 trillion, we've got a long way to go. And that's just the Fed. It's not even talking about the People's Bank of China, the ECB, all the other central banks of the world that have yet to tighten as much as the Fed. Anyways, that's it for today's video, guys. Thank you all so much for listening in. If you happen to enjoy it, consider dropping a like. It's a great way to support the free content we put out here on this channel. If you would, consider checking out the Dash Report. We're trying to move away from doing as much advertising here on the channel and focus in more on the newsletter. We will still do ads from time to time, but mainly on this newsletter as we prepare for this changing environment. It's an environment where you got to be smart. You got to make coordinated, isolated moves in the market, not doing so much trading, revenge trading or over trading the market, trying to capture every opportunity to hedge against inflation or really then just make returns. A lot of us can be too eager to the market. We have to be disciplined, and we have to learn from one another and surround ourselves with the right investors and traders who are hopefully more mature and preparing for those worst case scenarios and still thinking optimistically about opportunities. We have a lot of potential market leaders for the next bull market that we discuss in the dashboard discussion group and some stocks and cryptocurrencies that we're watching. But if you guys are interested in it, I think it'd be a valuable proposition for many of you. Even if not, as I said, if you can drop a like, it's greatly supported. Well, that's it for today's video, everyone. Thank you all so much for listening in, and I'll see you guys right back here at 6 a.m. Eastern Standard Time on Friday. Take care, everyone.